Zooming in on shares of Embassy REIT, the company posting an annual 12% growth on revenue, beating forecasts. The group saying global capability centers accounted for about 50% of its leasing activity during the quarter, with Bengaluru leading the demand. Aravind Maiya is Chief Executive Officer, CEO of Embassy REIT, joining us with his thoughts on the business outlook of this REIT. Thank you very much, Aravind, for taking out the time. Elaborate a bit more on the key highlights of your earnings performance, and especially the kind of pickup in demand that you're seeing in the technology hub of Bengaluru.
Sure. Good morning, Tanvir. Good morning to all viewers. I think if I have to summarize what we are seeing in our business in one word, I would say it's all about growth for us. And why I say that is, firstly, starting with our portfolio. In the last 12 months, it's increased from 35 to 38 million square feet of completed space. At the same time, our occupancy has grown 4% to 90%. And the other interesting thing what's happening in our business is we are constructing 8 million square feet as we speak. 80% of that is in Bangalore. Around 5.7 million due for delivery in the next 24 months, and close to 70% of that is already pre-leased at 19% yield on cost. So these are like confirmed growth numbers for us. And lastly, the rents are growing. So all in all, it's very positive for us. And just diving into the second part of it, as I said, 75% of our existing businesses in Bangalore. Bangalore has always been the top absorption market for all India. Just in the last 9 months, it has been around 30% of all India absorption. And it continues to be a key demand driver for us, taken together with the global captive centers which are growing in India.
How are you seeing the commercial real estate market faring in India? And what are the regions which are outperforming, provinces or cities?
Yeah, I think when you look at commercial real estate, to start with some statistics, Tanvir, last year, which is calendar year 23, we did a gross absorption of 60 million square feet, which was equivalent to the all-time record of 60 million square feet done in the year 2019, just before COVID. In this calendar year, in the first 9 months, we have done already 50 million square feet of absorption all India, and this year we are expected to touch 70 million square feet by end of December 24. So it's going to be a real record year for us. And we are seeing that this absorption is growing across cities, but to call out the top 3 or 4 cities, it would start with Bangalore, followed by Hyderabad, NCR, and then Chennai. So literally, overall, if you look at India as a country and the top 6 markets, other than the 4 I mentioned, you have Pune, as well as Mumbai. These are the top 6 cities. Literally, there's growth in all the cities, but the top 4 are what I called out. And if I can just expand this a bit more, Tanvir, and going back to the answer to my first question on global captive centers, right? There's more and more companies coming to India, setting up their global captive centers. But the key difference between the past and the present is previously global captive centers were just support centers. But now they are more what we call as transformation hubs, doing more cutting edge work. And while there are a lot of statistics on global captive centers, 2 interesting ones are, as we speak now, 23% of Fortune 500 companies have a GCC in India, and as per industry reports, that number is expected to go up to 43% in the next 5-6 years. There are about 6,500 global roles in the India captive centers. That number is expected to go up to around 30,000 global roles. So it's much more diverse kind of roles being done in the India captive centers. That's the key demand driver for us.
That's the key demand driver for you. You're looking at occupancy growing to 90% by value this quarter. Is this sustainable?
So, good question. Pre-COVID, we were around 94 to 95% by value. And then it was, of course, we faced probably the biggest headwind we had as a sector for about 2.5, 3 years. We dropped to a low of 83% at one point in time. And since then, we've been tracking upwards. And we finally hit 90% for the first time post-COVID. We believe that this number will track further up to reach a stabilized number of, I would call it 95% over the next probably 4 to 6 quarters.
Right. And also in terms of your leasing guidance, you are guiding for upwards to 6.5 million square feet. Would you require more capex? Are you adequately funded? And what does that mean in terms of future cash flows and also dividend payouts? One of the key reasons why investors get drawn to investing in real estate investment trusts.
Sure. I think in terms of growth, right, Tanvir, very valid question, because REITs are not just a yield product. It's supposed to be a yield plus growth. Unfortunately for us, we were the first REIT. It's been now 5.5 years since we listed. The first few years we couldn't show growth and distribution, but this is the first year where we are showing a growth and distribution. When we look at the guidance what we've given for FY25, we've said that the NOI will go up by around 10% and the distributions will grow by around 7%. The first 6 months we've already grown by 5% and we are on track to meet the 7% growth by end of the year. So when you look at it from a cash flow point of view, right, one is what we are churning out on a quarterly basis. The second is the growth component. The growth component is coming from the existing occupancy pickup as well as all the construction which we are doing. And as we speak now, Embassy REIT, we have a leverage of 31%, lowly levered. We are a AAA rated company. We are probably, we have the lowest cost of borrowing across companies in the sector. We are just tracking below 8%. And probably that's another interesting potential tailwind for us, because we believe interest rates have peaked out in our country at least. And as interest rates start tracking downwards, we have a $2.1 billion debt book.
Sure.
All of these interest rate, downward revisions will have an automatic benefit in terms of additional cash flows to our unit holders.
We wish you the very best for the future, Aravind. Thank you very much for joining us and congratulations on your earnings.
Thank you very much, Tanvir.